What's up, guys? It's Rustic here. We're going to be taking a look at Tesla's chart, analyzing a couple different time frames. Going to first take a look at the daily chart. Going to look at some different levels. Going to look at our smart money concepts. We're going to compare them against some of our retail concepts using like moving averages, supply and resistance zones, things like that. Before we get started, don't forget to check out the link in the description below. Currently have 1 month free promo code running for raw stocks. That is going to be in the description. So click on the link if you want to try it out. Today we had over $500 in closed callouts for Tesla options. We're also still in a Tesla trade that is currently up pretty big. That's on some contracts that are a few weeks out. So jumping into the chart here, we got daily chart pulled up. Like I said, we got Tesla, and we want to take a look at what price told us today, right? So if we're looking at that move up that we, kind of watched after earnings kicked off, we saw that rally, we saw that news come out, right? That gave us that push up onto a Monday, and since then we've been in a corrective pattern, right? And so we haven't taken this low yet, and this low comes down here at 176.02. In a corrective pattern, we're looking for a price to come down once, pop back up, come down at least a second time. So even if it just barely crosses that low of that 176.02, we're still looking for price to make a push down, right? And so where would that push down likely be? Well, if we're looking at the daily chart, we have some clear indicators of where that potential push could be. So this yellow line here actually comes from a lower time frame chart, and it's a spot where there was a breaker block. Actually, we can see it also on the daily chart here. Same thing. So that block back on Tuesday the 9th is a breaker block, right? We see it labeled here as a change of character. And so that's where we saw that first move up break a previous high structure, and that gave us a change of character. So that yellow line there is the mean threshold, or the 50% level of that block itself. And so that is an important point that we could see price come down to. Now, it just happens to correspond that the 50 period simple moving average on the daily chart is right around that same level. So even if we push down to it, we could push as low as the candle open here at 172.99 and still leave that breaker block intact, acting as support, which could potentially push price higher. Now, if we take out that breaker block and we take out that level at that 174.60, give or take, right around that 174.60, 174.50, again, right around where that 50 period moving average is as well. If we come down and we hit that, we're likely to see, at least in a low time frame, we're likely to see a bounce on that level. Okay, even if we end up taking it out entirely later on, we are likely to see some kind of reaction. So when you're watching your short-term time frame, if you're trading scalps or day trading Tesla, look for that to be the first level where we see a reaction. Now, that reaction doesn't have to be meaningful. It doesn't have to really send it rocketing and rallying, but we are looking for a bounce to come there. So if you're short, you could look to take profit on that level. If you're scalping or day trading, you could look to enter a position in that level and see if you can get a reaction to the upside. Pretty clear that breaker block ends again at the opening of 172.99, so that could be a stop loss for you if you enter that trade long on that level. Now, if we take that level out, we have our gap fill between these two wicks, right? And that is from the high of the candle of April 26th, and that high is going to be 172.12. So just a little bit below that previous level of the breaker block low that we're talking about, but that's going to be gap fill between those two candles over that weekend. So we could come down to there. If we break that first level, we could come down to there, to that 172.22 roughly, officially 172.12 according to the candle high. And so we could also find support there in just a gap fill and see a bounce, right? And that is a little bit above where that 20 period simple moving average is also sitting. Now, we also have the daily candle close from April 25th, which is a Thursday, which is just slightly below that gap fill. That could also be a level. We also have the low of the April 26th, which is a Friday, as a level as well. So four levels, all kind of like in that same area. Also corresponds with the 20 period moving average. So if we give up the 50, we might test the 20, or we might test one of those levels, right? It's not uncommon for us to see price push down or up through one of the simple moving averages, but then also end up rallying or fading, to recover that, so that it kind of looks like it looks like it's breaking out, but then at the end of the day, it doesn't end up breaking out or breaking down past that. Now, beyond that, we have a whole nother gap. If we just straight up shred through these, right, then we could look to come down to 150, right, anywhere between 157.67 and 147.45. There's that earnings gap that still hasn't been filled, and we could see price do that. Now, if we look at some of our fib levels from top to bottom, right, of that rally, and we were looking for price to come back down below equilibrium, you can see equilibrium sits right around where that 20 period moving average is. We also have the 61.8 and the 70.5, which is our optimal trade entry zone, which sits right around where that gap is open. And then beyond that, we got the gap fill. So lots of different targets if we start moving to the downside that we could be watching. If you're looking to go long in shares, your optimal entry is going to be 156 to 161, right? Right around that area. That's where I would start building a position, but I would be watching these daily period moving averages to see if we pierce through them or if they find support off of them. Because if we find support, if retail starts buying or even smart money starts buying around these moving averages, we can see price push back up and try to run at 200. But right now, it looks like price is moving down. That was a pretty nice candle today, and we did play puts, and I'll get into those puts in a little bit. But nice move down. So we're looking for more downside to minimum test some of these levels and those moving averages. We jump into the 1 hour chart. The 1 hour chart is where we took one of our entries today. And I'm going to tell you that was the second entry that I took on Tesla. And it's currently up pretty significantly. But what I saw was a 1 hour fair value gap. So we had already taken one put entry somewhere near the top here, more near open, and we wrote it down, right? And then what I saw later on was that we set this fair value gap and that price was pushing back up to it. I waited for this hour candle to close, which is the 10 o'clock hour. Okay. And then when the next candle pushed up into that fair value gap, that's where I took my short and still currently in the short. I can tell you guys where the short ended for the day. I can tell you guys what contract that is. It's definitely too late to enter that trade just because we're pretty far away from that fair value gap and extended off of the moving averages on the 1 hour chart. But this was a Smart Money Concepts entry, currently up $800, 18%. And they were 175 puts for May 24th. So a few weeks out, so buy some time because definitely looking for that push, right? We've been in kind of a consolidation period. Definitely looks like a bull flag type of pattern where we saw that move up. Now we're kind of flagging, right? We're finding those support levels between 178 and then we'll see if we can push down a little bit lower. We have pretty clear support at the 185 and then again at 187 or resistance, I suppose. So between those ranges, we're looking for a breakout or a breakdown, right? Now, something you want to note on the 1 hour chart is that we have a large 1 hour fair value gap here. There's also a gap between price here. So likely that if we push down, even if we see that reaction at 175, it's likely we push down to potentially fill this gap, dig into this 1 hour fair value gap, right? And I would look for 166 to be the ultimate low. I don't expect that we'll go lower than that, but I wouldn't be surprised if we see a push over the next day or two all the way down to 170, right? Potentially running a test on this order block. And let's go ahead and throw that order block in there because the indicator does not show us that one. But if we put the order block in there as well, because a lot of times what you'll see is you won't see price run all the way down, right? All the way down to the level, but we'll see a reaction in that order block. And it just happens that that order block comes in between two levels. So I would expect, again, that we might see a strong reaction at 170 that pops us back up, and then maybe dig a little bit deeper into that order block, right? Maybe like 168, like the consequent encroachment or mean threshold of that order block, right? And 168 to 166 would be probably my bottom line. I don't think we're fading further than that. Now, if we give up this fair value gap, though, entirely, that's not a great look. So what I want you to notice too, at 169 is fair value gap low, and right above that is our 170 level where that order block starts. So totally possible that we dig right into that zone, that $1 range between 169 and 170, find our support there if we don't already get support off of the levels, find our support there. If that fair value gap holds, that's going to be enough to probably push us back up to 200. Not sure what the news is going to be that might drive that rally. It could just be technicals, but those are things we'll be watching. And you can also see we have the RSI that is not in favor of the bull case scenario right now. It's a bear case scenario. We've seen that fade, right? We saw that kind of push up, never got over to an overbought territory as we've just chopped here, coming off that kind of overbought rally, right? And now we're seeing it fade. We're going to probably come back down to an oversold reading. Now, if that happens quickly, we'll probably drop right down into oversold and bounce, and then probably see maybe one more drop to just steal the stops and take a new low on this move down, again, inside this fair value gap, and then start to see price push up from there. Now, if we jump back to the daily chart also shows us that although we have our RSI pointing down and we're over 50, we're right around 50, there's still support for this move to continue up. We're way far away from an overbought reading. So that would, again, if we were looking at the daily chart, support are dropping down to 175, maybe 172, maybe all the way to 170, right? We could see this RSI come right under the control line and then swing back up for another push back towards 200, right? Trap some bears, make it look bearish, make it look like it's going deeper, and then rip it back in the other direction. Happens all the time. So we will be watching to see and look for that manipulation too. You always got to look at the market like it's being manipulated, because most of the time it is to some degree, right? It'll look like something's happening, and then they turn it around on you. And sometimes those things aren't so obvious. So that's why we use the smart money concepts as well as a few of the retail indicators. Now, if we look at the 15-minute chart, 15-minute chart shows us kind of just right in this nearly oversold territory, but not quite, right? So it wouldn't be out of the ordinary, again, to see us drop down to 175 early tomorrow, right? Have that RSI just punch down, right? And then see maybe a strong reaction back up, maybe close to the 178 level, and then see if price wants to drop down and attack those further lows. So we'll be watching to see if that happens. Now, alternatively, because we're just right in this low on the 15-minute chart, if we can get back above the 20 period SMA, right, and make a move on the 50 period, if we see that, maybe in pre-market that curls up, that could run us back up into this fair value gap for another test on the 15-minute chart, right? Even though this is a 1 hour fair value gap, could run us up to see another test there, ultimately to dump down maybe Thursday or Friday. So we definitely want to be watching, like if this is rallying, into tomorrow, or if it starts dropping. I'm definitely looking for a short opportunity here to present itself, but we'll see if it does. A new one for tomorrow's trade. Now we do have an order block up above. Not likely that we're going to get back up there. That's resistance. I think once we do get back up there, we are going to push through it. We might find ourselves resist it one more time and then maybe make an attempt to push through it. But if we start getting back up to that 185 level, expect that we're going to clear it and head to 200. Now, lastly, we'll drop down into the 5-minute chart. Something I want to point out, and this is a template that we see time and time again. I've called it out here on the channel before. I'm going to call it out here again. If we look at the London range, okay, and we look, and what happens is you have London open and we fade, and New York doesn't get back up above the London lows, we oftentimes see market open and try to make a push up, but never crossing the 50% of the London range, right? We see a rejection, and then it ends up being a directional down day. And that's exactly what we got today, right? We had that initial push up. We couldn't even get back up to that 50% of that London pre-market open range, right? We couldn't get up to it during our New York open range. We could not even push up to the 50% right out of the gate. That usually tells you directional down day, right? We take our short, we wrote it down. Okay, that was our first position, and I will drop down into the 1 minute just so we can take a better look at it. Basically, what I was seeing when I took the trade was that we had an inverted fair value gap right there, met by another fair value gap, okay, met by a change of character right here, and we pushed back up. Could have waited for that push back up to take your entry. I know I took it over here right after that fair value gap blade, because then we had an additional fair value gap, right? And if you watch that one, you could have taken that trade there as well when we pushed back into it. Either way, two fair value gaps, right, with the template that we're looking for a down day and an inverted fair value gap. All those were good signs for entry. We took our ride down, we took our close, we left a runner, we closed the runner. I had a cash trade as well that I let go for a little bit longer. Ultimately, by the time I closed it, which was back over here during the PM session, the profit was about the same as if I would have just closed it on that initial drop. So didn't get too much money squeezed out of that one. But you also see there was some good indicators on the short-term time frame. So this red fair value gap is our 1 hour fair value gap where I took that short entry. But if you also look on the lower time frame, it was confirming the same things, right? We had an inverted fair value gap right after we pushed up. I took my entry here just as soon as we were pushing into that fair value gap. And this is on the contracts that are 3 weeks out. But if you wait for confirmation, you get an inverted fair value gap, you get another fair value gap. Okay, we pushed back up into it. You can take your trade there. You can take it in the inversion. You can wait for us to come back around, retest that fair value gap. Either way, entries are all around the same amount. And then we catch another ride down because why? The template said directional down day, and that's really what we got. You can see we faded into after hours, so we continue to drop. We're at 176.80 on the official close on TradingView, and like I said, likely we're heading to 174.60 tomorrow, maybe even lower. So we'll see what the market shows us in pre-market tomorrow. See if we can catch another ride down, or maybe we catch a ride back up. We'll just see where price opens, but excited to see what Tesla has to offer. Definitely going to be some good opportunities here to buy in the future as well. If you feel like you missed that opportunity to get in on shares, back at lower levels, I think we're going to come back down at least a little bit where you can try to grab that entry. So that's all I got for you guys today. I appreciate all the support. Thanks for all the love. Drop some comments. Let me know that this content is helpful for you guys. Get those levels on your chart, and we'll be back at it tomorrow. Take care and good luck trading.